Hello, hi, good morning, good afternoon for those that are in Japan. This is Lucas Coffier from the EU-Japan Center, specifically from the EU-Japan Technology Transfer Help Desk. I'm the manager of the help desk for those that don't know me yet. As usual, I'm introducing a little bit about the help desk, a couple of details so that you can reach out if you wish to do so. And then I will also introduce today's speaker. Today we have a colleague that is here living in Tokyo, Maurizio Raffone. Welcome, Maurizio. Thanks for being with us.
Thank you, Luca.
We have Maurizio will give you in a second his brief bio, but let me tell you that on this page you can see my email if you want to reach out, the website of the center, the link to the survey that is always open for SMEs that we are running with the help desk, and also finally the link to the newsletter that we send out to our members every 3 months with all the updates, past events, reports, summaries, pictures, and so on. So talking about today, we are now ready to start webinar number 31, Blockchain in Japan, a market overview. Maurizio is the founder and CEO of Fintech Limited, management consulting firm focused on the fintech industry and active in Japan and Hong Kong. Maurizio has over 20 years of international finance experience with expertise in credit, derivatives, structured finance, and fund management. Prior to this company, Maurizio's most recent roles were as managing director at UniCredit, which is Italy's largest bank, and as a partner at Trispan LLP, an asset management firm based in London, where he was Deputy Chief Investment Officer for Trispan's Global Macro Fund. Maurizio holds a Master of Philosophy in Financial Economics from the University of Cambridge and a first-class honors degree in Economics and Management from Royal Holloway College of the University of London. Maurizio, without further ado, the floor is yours.
Thank you very much, Luca. Really appreciate the kind introduction, and big thanks to all the participants. I think there's a few good people that have turned up this Friday morning European time. So today we'll talk about, I think, a fairly interesting topic in what's going on in the blockchain space in Japan. And before we do that, Luca's already introduced myself. This is me, because you can't really see me, unfortunately, with this platform. And as Luca mentioned, I've worked mostly prior to starting my management consulting experience in investment banks in London, Tokyo, and Milan. But then the last few years, I've also been focused on education, teaching courses, either online or here in Tokyo. And I would recommend everyone to possibly reach out to me and have a look at what we're doing here in Tokyo and Hong Kong. So these are some of the contact details. Now, what we're going to talk about today is a fairly broad topic, and I'll try to break it down into manageable bits, so to say. So we'll start with a brief introduction to Japan. I'm sure you're all fairly familiar with the landscape. I think it's important to highlight just a few points relating to where the country is at. And then I think we'll do a bit of a deep dive into probably the most important component of the blockchain space in Japan, which is regulation. Because Japan has set itself as a leader in regulating cryptocurrencies and the use of blockchain, and therefore it's important to see what's happened and what's currently happening and what is planned to happen over the course of the next few months. After that, we'll have a look at some of the, I think, selected corporate initiatives, both in the financial and non-financial space, to let you get an understanding of what the private sector is doing in this area. And then we'll look a little bit about the ecosystem of blockchain companies and stakeholders in Japan. And then we'll look at some challenges coming up for the future and opportunities. And then I'd like to open the conversation open to questions, suggestions, points, anything that you'd like to discuss. So we'll try and keep it tight. There's a lot of content to go through, but let's start with a little bit of an introduction to Japan. So although Japan is probably not as much as in the news as perhaps China when looking at Asia, it's still the fourth largest economy in the world. And but as you can see from the charts, it hasn't quite kept up in the last few years with the kind of economic development that we saw after World War II, probably up until the early 90s, after the burst of the Japanese bubble economy, where the manufacturing industry essentially drove growth to a great extent. However, since the 90s, economic growth has been somewhat low, averaging about 1.7%. And the other thing to notice is that it hasn't been without hiccups. We've had 4 technical recessions since 2008. So you can see that it hasn't been an easy last few years. However, I think a very interesting point is that when you operate in Japan, it's like operating almost in a market as big as the European Union. If you look at the regional GDP of Japan, you can see that the Kanto area, which is around Tokyo, is equivalent to that of Italy. If you look at Hokkaido and Tohoku regions, which is sort of the north side of Japan, is equivalent to Sweden, and some other examples that you see in the chart. So actually, Japan provides a depth of a market that is quite comparable to the core EU. Now, what's been very interesting in the last few years in terms of major topics dealing with Japan is what we call Abenomics, from the name of the prime minister that has been dominating the political agenda for the last few years in Japan, and the issue of aging population. So since 2013, we've had Prime Ministers Abe pushing through 3 sets of, let's call them policies. One, pushing for loose monetary policy. We can talk loads about how the Bank of Japan has been inundating the market with cheap cash, but also having a fairly flexible fiscal policy and putting forth a number of structural reforms. The whole idea is to kickstart the Japanese economy after what we saw was a bit of faltering since the 90s. Now, the big issue in Japan is population. This is a chart that shows the age group over the years projected from basically today onwards. And you can see that we're going to have in Japan a lot less young people and a lot of older people, and generally a fairly rapidly declining population. There are some estimates that assume a drop of about 25% almost by the year 2050. Now, what that is doing is putting a lot of pressure on creating a need to unlock productivity gains in the economy, because there's really no other way to withstand this dramatic demographic shift. So with that background in mind, let's deep dive into what's been happening in Japan in terms of blockchain regulation. So I promise I'll try and make it not too boring. First of all, we need to have an understanding of what blockchain is. Otherwise, we're going to be talking in circles a little bit. So just to be very clear, blockchain is just a type, probably the most popular type of distributed ledger technology, which is simply just a way of storing data digitally. This is an example, visual example of what a centralized system here on the left would be like. For example, the government holding data about people's date of births and names, and marital status and so forth, and releasing that information if you need a passport, an ID, a driver's license, so forth. A decentralized system is where with different data sources, you're able to access different services. For example, when you have a Facebook account, you're then able to use your login credentials to access other services, and you're transferring some information from your Facebook information into those services in order for you to enjoy those. So some data is held at source, and some data is held with the apps or services that you use locally. Now, in a distributed situation, essentially everyone holds a piece of, well, all the data. So you don't, basically it creates an interconnected network, as you see on the right-hand side of the graph. Now, normally, and that I know there are other cases where that's not exactly the case, but normally blockchain uses digital units, which we call cryptocurrencies, to perform transactions, and the transactions are essentially storing new data. So in a way, which is very interesting about databases, and normally databases are fairly boring, I think, but in terms of blockchain, it makes it interesting, is because having these digital units, you can equate a blockchain with basically having its own payment ecosystem. And a simplified way of looking at it is the following. So if you can picture a blockchain, very crudely demonstrated with this little graph, you'll see on the one side you have data providers. These are people that actually provide information, for example, if you transfer value from one person to another. And then you have people that use that data to confirm that information is, for example, for transactions, like in the Bitcoin blockchain, where that information is used to purchase perhaps assets. And then you have a group, a third party in there, which is the data verifiers. These are entities or people that actually need to make sure that the data is being provided works and is correct, and that the people that are actually using that data are not misusing it. In other words, they're not rewriting it. Now, in order for this blockchain to actually make sense and work, you need to have an economic incentive for people to provide data, for people to use the data, and for people to verify the data. And that economic incentive is generally provided through the form of these digital units, that is cryptocurrencies. So that was a bit of a crash course in blockchain. I hope it's fairly clear. Now, moving on to the regulatory landscape, I think what's probably most important, or say the year zero of the Japanese journey into blockchain and cryptocurrencies refers to Mt. Gox. Mt. Gox was the largest Bitcoin crypto exchange based in Tokyo, and in February 2014, it was hacked. So, as we already mentioned, Mt. Gox was based in Japan, and its peak handled over 75% of worldwide Bitcoin transactions. So it was the place to be. And what happened since the hack, as you can see from the graph here, is there was a massive drop in the value of Bitcoin, of course, with the concern of the security of the platforms where the cryptocurrency was traded. The size of the hack was about $500 million, so not irrelevant. I mean, fairly sizable. And that shortly thereafter, it precipitated bankruptcy for the exchange. Now, what's that created, other than obviously some pain for the people that actually lost money? It's put a spotlight worldwide on Bitcoin, on crypto trading, and Japan, because again, the exchange was actually physically in Shibuya here in Tokyo. So a few things happened since then, and let's have a look at it from a timeline perspective. So right away after the bankruptcy of Mt. Gox, there were some questions from the Prime Minister cabinet about legal issues surrounding Bitcoin, what was happening. And this went on in terms of fairly high pressure, high tempo discussions between cabinet and FSA, financial regulators, and experts. So in June, essentially less than 6 months away from the hack, the the LDP, the Liberal Democratic Party, which is the main ruling party here in Japan, produced actually an interim report on cryptocurrency. At the same time, about a year later, we've had a global understanding on how to approach regulating virtual currencies from the Financial Action Task Force, followed by a report in January 2016 by International Monetary Fund talking about virtual currencies. And shortly thereafter, in February 2016, the FSA, which is the financial regulator in Japan, actually put together a report on how to strengthen Japan's payment business, payment systems. In 2016, again in March, we've had some banking law reforms that essentially modernized the banking regulations that were present at the time in Japan, particularly with looking at the impact that information technology is having on the financial markets. And finally, at the end of May 2016, a bill was passed, which was enacted on the 1st of April 2017, which essentially revised the current Payment Services Act. And this is important because under the new Payment Services Act, there was a whole creation of the concept of virtual currencies and how they need to be handled. And we'll look at that next. So what does or did the revised Payment Services Act say? First of all, it defined virtual currencies. It's something that wasn't there before, and without a definition, you can't really regulate it. And they created two types of virtual currencies, a type 1 and a type 2. A type 1 is essentially, there's no point going through the full definition here, but it's essentially crypto as we know it. A type 2 virtual currency is a currency that can only essentially be traded through crypto. So no fiat currency exit or for that type of currency. So if you are able to trade Bitcoin against dollars, that Bitcoin would be defined as a type 1 virtual currency. If you're looking at a virtual currency that can only be exchanged for another virtual currency, essentially that's a type 2. And they've actually created a little graphic to go through how to define it. Clearly, the idea is virtual currency needs to be transferable through a computer network. It needs to be recorded electronically. So all the transfers of value need to be recorded electronically. And it cannot be a currency like a traditional currency. So it cannot be Japanese yen or a US dollar. And therefore, in fact, the misnomer that particularly the foreign press was going about recently was the fact that they thought Bitcoin in Japan was a legal tender. It's not, because it's not in the concept of tender. It's not actually currency. It's a virtual currency. So it's a separate definition of it. And with that, and because it's actually got its own definition away from traditional currency, that attracts different type of regulations and requirements in terms of who trades it and how it gets traded. So as we said, virtual currency is actually not legal tender. They also encompass things like tokens for games, video games, or coupons. However, unless those are specifically only used in certain areas. So the whole concept of regulation is that if there is any value out of virtual currency that can be extracted from the virtual world and can be put into the real world, then if it needs to be regulated, and therefore it falls under the definition of virtual currency. Now, in order to have a handle on and avoid repeating what happened with Mt. Gox, also, the whole regulation also impacted how virtual currencies are traded. And so there was a whole definition of virtual currency exchange businesses and what they're allowed to do and what they're not allowed to do. So basically, the regulated activities of virtual currencies include the sale and purchase of virtual currencies or exchange of those virtual currencies for other virtual currencies. And on top of that, beside providing for sale and purchase of these currencies, if you also act as an intermediary, an agent, or representative for those activities, you also need a virtual currency exchange business. You fall under that definition. On top of that, additionally, if you manage other people's money or virtual currencies in conjunction with the activities of the sale and purchase of virtual currencies or as an intermediary and so forth, you also fall under the definition of a virtual currency exchange business. So all that meaning that we'll see in a minute will require certain forms of licensing. And the beginning was a registration requirement. So anyone doing a business in terms of virtual currency exchanges had to be registered. Again, any intermediary or people soliciting a purchase of VCs to the general public also need to be registered, or people that manage funds that deal with virtual currencies. And interestingly enough, this definition also encompasses wallet providers that act as intermediary for virtual currency trading. However, it excludes wallet providers that do not provide these services. So again, depending, I've seen foreign businesses come to Japan and having to go through this check to really see if their wallet solution would trigger a requirement to register as a virtual currency exchange business or not. Now, once the regulation took place, there were already a number of exchanges in place. So the Financial Services Agency, the financial regulator here, provided a grace period for the exchanges to register and go through a process with them. And they needed to prove that they could keep separate customer assets from their own assets, that they could maintain proper bookkeeping, they could undergo annual audits, they could file regular business reports, and undertake know your client and anti-money laundering procedures. So these were all fairly standard processes for people familiar to the financial world, but not necessarily standard for the virtual currency world. So someone's just typed that my voice is not coming through fine. I apologize for that. I'm not sure what to do. I'll just keep talking, I suppose. Nevertheless, despite this higher degree of focus on the business of virtual currency exchanges, we've had further hacks. Another big one, CoinCheck in January 2018, with about $540 million equivalent. Xife, another exchange, had $60 million stolen in September of 2018. So the regulation itself wasn't properly, it wasn't really a solution for best practices in the virtual currency exchange business. But also what we noticed is that the rules that were set out in 2017 didn't really address things that were happening like ICOs or STOs. So in terms of promoting access to essentially companies that are active in the blockchain space, there was nothing in that regard to make it possible. And that the gray zone situation relating to all these activities for ICOs and STOs created some degree of pressure and lower degree of comfort by the authorities here, because Japan was actually a fairly important market for investors, with several foreign blockchain projects coming to raise funding here in Japan over the course of the last few years. So the shortcomings of the framework were pretty obvious after a year or two of being live. So more changes have been discussed at the government level, in Parliament actually, promoted by the financial regulator. And the very first step took place in October 2018, when the financial regulator granted self-regulatory status to the Association of the Japanese Crypto Exchanges. And the association promptly issued a fairly comprehensive set of guidelines and best practices that all members needed to adhere to. And also, because of its self-regulatory status, the association was now able to take actions in terms of inspecting and monitoring all its members. So you can see that that's definitely an important step in terms of making sure that the regulations are actually being adhered to. But the big one is happening in April 2020. There's going to be further refinements to the Payment Act that we saw before. We're actually going to have a renaming of virtual currencies to crypto assets. And that's very interesting because they're not going to be looked as simply as currencies anymore, but assets. And therefore, we'll be able to incorporate a number of additional regulations encompassing different uses of virtual currencies or crypto assets. That also included new registration requirements for crypto exchanges that will provide margin trading, which historically has been a fairly important part of the market, and we'll see some statistics soon. And margin limits have been clarified, and they've been brought in line with limits for foreign exchange trading, which is very important because essentially limits the amount of leverage that investors can have to 3 or 4 times, depending on certain aspects. Whereas in the past, we've had exchanges offering products with embedded leverage of 50 to 100 times. So much more sort of controlled risk-taking regulation. This is actually another important requirement. So exchanges will need to maintain funds equal to amounts held in hot wallets. And this is a bit of a technical term, but essentially anything that any crypto that is stored for clients on hackable devices like hot wallets will need to be collateralized fully, 100%, by the exchange itself, so that they're never going to be in a position where, the idea is that the investors will never be in a position to lose money because of another hack. And in fact, there will be separate licenses for custody services. And that can actually open up a number of third-party service providers to focus solely on custodial services. So you can see a little bit that the industry will develop along the lines of what we normally understand the financial services industry to operate. And what's going to be very important, we talked about the gray area in terms of ICOs and STOs, but essentially with the new regulations, there will be a requirement to comply with the Financial Instruments and Exchange Act, which is essentially the securities law here in Japan. So no more gray zone, so to say. Again, the regulation is expected to come online April 2020. There may be some last minute changes, but so far this has been driven by the financial regulator through Parliament, and there hasn't been anything coming out particularly surprising. So people expect this to actually be incorporated fairly straightforward. Now, tax is a big point about here in Japan, how crypto assets are taxed. So although regulation is quite, I would say, far ahead of many markets, if not all markets, other markets in the world, tax is something that hasn't really been looked into, or maybe it's been looked into, it just hasn't been regulated. So currently, any crypto-related gains are treated as miscellaneous income in Japan. And what that means is that it gets taxed at the marginal rate, which could be up to 55% for individuals. So not particularly efficient. But beyond that, it's also not possible to deduct losses from your gains. So if you happen to have a gain in one currency or in one crypto, but actually a loss in another, you still have to pay the full tax on your gain and don't get any benefit from the losses that you might have incurred on another part of your portfolio. And therefore, you can't even carry forward losses to the next tax financial year. What's actually very difficult for using crypto for transactions, day-to-day transactions currently, is that once you make a purchase with crypto, you're essentially getting out of that crypto position, and therefore you're crystallizing a potential tax bill on that amount. So very inconvenient. And also, there isn't really a way to get around it, because even when you trade between virtual currencies and you're making a gain, that gain is taxable. So it's a fairly punitive situation. And the good news is that consumption tax, which at the moment, which was just bumped up from 8% to 10% in October, is not applicable to virtual currency transactions. And there has been a talk of a flat tax rate of either 15 or 20%, a little bit similar to what one might see in traditional securities income, like dividends or interest income and so forth. But so far, there hasn't been any concrete evidence that that will be regulated or put into law. So that's still a bit of a question mark on how the market could evolve from there. Now, what's very interesting is that beside the overall regulation and the legislation that goes before that, there has been also a push towards experimentation. Maybe not as much in some of the other jurisdictions, but we have seen in Japan the first blockchain-based business enter the Rectory sandbox that was launched again in April 2017. A company called Crypto Garage was approved to be part of the cabinet-sponsored Rectory sandbox starting in January 2019. It's a 12-month process, so they're about to actually graduate from the sandbox, and it'll be interesting to see if they'll actually include that solution into a proper business. And basically, their idea, just to give you an understanding of what their solution is, there has been a lot of issues, as I think you probably all know, about the volatility of virtual currencies and crypto in general. And that's made it relatively unappealing for most traditional institutional investors. On top of that, there have been fairly different settlement processes and trading processes between different exchanges and different virtual currencies, which has led to a higher counterparty risk than necessary, a fairly low level of confidence between parties that trade. And it's also been fairly difficult for regulatory authorities to keep track of crypto trading. So the next sort of question or issue that has been fairly obvious, this is not necessarily a Japan-related issue, but I think a broad global issue, is the fact that these exchanges, crypto exchanges, have been prone to hacking, and keeping funds at the exchanges has always been fairly risky for investors. And taking them out could be time-consuming, costly, and so Crypto Garage came up with a solution, essentially create a stable coin based on the yen to trade on sidechain via atomic swaps. I know this is a bit of a mouthful. There's a graphic here that hopefully gives you an idea. But the whole idea is that you are able to trade across different exchanges and different currencies using a stable coin, in that case JPY based, meaning a stable coin is a virtual currency whose value is equal to a unit in a fiat currency, and that value doesn't change, or doesn't change very much. It's stable by definition. And that in itself is very interesting, because it will allow the ability to take currency out of the exchange system and keep it into your own private wallet as an investor, and put it back into another exchange without having to suffer intra-currency volatility and having to move it between different virtual currencies, and always lose in terms of bid-offer spread and so forth. So it's a bit of a technical solution, but it's one that could actually enable a lot of the traditional financial institutional investors to look at acting in the virtual currency space without having to take the full brunt of the market volatility. But beyond that, I mean, this is a very interesting initiative, and we'll see whether it'll come out of the sandbox successfully. But blockchain is actually a very important part of the Ministry of the Economy, Trade and Industry vision for financial technology in general. They have a policy that I've come up with in terms of essentially a number of priorities, including promoting the use of financial technology among small and medium-sized enterprises, support the creation of more regulatory framework, support smooth flow of money. What's very interesting is they do recognize the importance of using blockchain technology to support that flow of money. So the ability to transfer value across businesses and across individuals in a efficient, time-efficient, cost-efficient way. So it's very interesting that that technology itself forms part of a policy paper by the Ministry of Economy, Trade and Industry. So hopefully the whole idea that you've gathered so far is that Japan, from a regulatory perspective, is really into blockchain and crypto. They want to get it right. They want to regulate it. They want to support that development. And I think the next part will look a little bit about how the private sector is reacting to that. So what are some of the key corporate initiatives in blockchain? Now, actually, one thing that you may realize is that because of the regulation that has been put in place since the revised Payment Services Act, it's actually a little bit tricky to deploy full blockchain solutions in Japan, because for most of blockchain-related activities, you may actually end up needing a virtual currency exchange license. Even though you may not want to offer those kind of services, but simply because you actually you may need to transfer crypto to fiat currency, that triggers a requirement for that license. So I think so far we have I've condensed this initiative in three major areas: banks, corporates, and tech companies. So we'll look at how blockchain is active from these three different actors. So starting with banks and financial institutions, Mitsubishi UFJ is Japan's largest bank and one of the biggest banks in the world. They've actually been working since 2017 on their own cryptocurrency called MUFG coin, not very surprising name. And the way they've structured it was essentially as a stable coin to reduce cost relating to payments and remittances. A little bit like Ripple, just to give you an idea. They've been working with a number of IT companies to develop apps for the solution, but it's still an idea. It hasn't really been launched. There have been a few tests, but now it's been 2 years and we haven't got users in Japan using MUFG coin. Now, Sumitomo Mitsui is probably the second largest bank, or one of the big three anyway. And it's part of also a Keiretsu, like an industrial group with Mitsui, which is one of Japan's leading trading companies, like import-export. And they've been working very closely with R3, which is a blockchain consortium you're probably aware of their blockchain called Corda, or their DLT called Corda. They've also developed another product called Marco Polo, which is a trade finance focused solution. And the idea is that they put on blockchain all different steps relating to trade finance. SMBC has conducted 2 different proof of concepts this year, one in January, one in October. And what's interesting, the one in October was done with a Thai bank, Bangkok Bank, and therefore sort of took the step to engage not only internal companies as part of the group, but also external financial institutions. And they've actually come out on press releases, saying that they'll begin commercial implementation of this platform from the 3rd quarter of this fiscal year, which for Japan essentially starts in December. Now, Mizuho is the other one of the 3 big mega banks. They've also been looking at trade finance as their core offering or core market for blockchain solutions. And they've chosen to use or experiment with IBM's Hyperledger, which some of you may know. But they also won a sponsor of an incubator here in Tokyo called Neutrino. And they've been fairly active, I'd say relatively fairly active in investing in blockchain companies or blockchain development companies, like Finality, for example. So they're probably not as aggressive as some of the other 2 mega banks, but they're still sort of trying to play the game. What's very interesting about Mizuho is that they launched an e-money service called J-Coin, and they've done it with signing up actually a fairly large number of regional banks in Japan too. And they mentioned that they could look at using blockchain going forward, but not quite yet, but also depending on how popular this J-Coin payment system becomes. Another interesting player in this space is SBI. SBI is a fairly big financial conglomerate. Now they're launching a new initiative to make them the 4th Japanese mega bank by tying up with a number of regional banks. And they've been investing and exploring blockchain technology probably more than anybody else here in Japan. In fact, this is from their own reports. You can see that they're looking at all different ways of bringing different technology into financial services. It's not just a blockchain, but it's AI, it's IoT, it's robotics, and they've set up a number of subsidiaries to look at exploring those opportunities, particularly with regard to blockchain. They have invested in exchange business, in mining, in remittances, derivatives, and so forth. So, for example, they actually own 60% of SBI Asia Ripple, which is the Asia-based unit to promote Ripple usage among financial institutions. Probably, I think this is the last example of in this space, in the banks and financial institution space. GMO Aozora Netbank is a JV between a traditional bank called Aozora Bank and GMO, which is one of Japan's largest internet service providers. And they've basically created a fairly innovative product lineup for a net bank. So an online bank, like a credit card with enhanced digital and security services and systems. And they've highlighted blockchain as one of their key core technologies. And in fact, in part of their business plan, they look at rolling out blockchain payments going forward. Non-financial institutions haven't been as active, but they've also been playing a part. A very interesting example is JR East, which is one of the largest train companies in Japan, and the company behind Suica, which is a contactless card that from payments, and it's widely used in a number of businesses, not just the train stations. And they've actually been exploring the use of blockchain to allow user Suica to actually pay not just through yen, but also through crypto. Just to give you an idea, Suica has about 200 million transactions per month. So that could be actually a game changer if they would really were to launch this functionality for the crypto world. We have a real estate company called Roden in Japan that actually went through a POC in 2018 to execute a real estate transaction using crypto. They've actually used a number of different protocols to do that. They created a specific real estate website where they matched buyer and seller and agreed the purchase price using Bitcoin. They used an API to connect the website to a virtual currency exchange, in that case Bitflyer, which is the largest Japanese crypto exchange, and created a smart contract which essentially notarized all the key transfer documents for that transaction. So they were very happy with that POC. They looked at about 33% savings in terms of processing time and reduction of errors. So real estate is a huge industry in Japan, could also be potentially an area where blockchain is going to be deployed. Toyota has been, I think everyone knows Toyota, has been very active in a number of different work streams in blockchain. Of course, a major focus is autonomous driving, but they've also been investing in P2P, so peer-to-peer car sharing with a US-based company, actually in car insurance with another blockchain developer in the US, and even digital advertising with a company called Lucidity and such, which is a famous advertising agency. So not just in their core business, but also ancillary businesses that Toyota touches upon. The two of the largest electric utilities have been experimented with blockchain to look at essentially peer-to-peer electricity trading. Hitachi, which is a big, large conglomerate with a lot of electronics pedigree, so to say, they've been testing blockchain data management system, particularly for their point system. As a company, they roll out, if you want to roll out a new sort of loyalty point scheme, you're likely to use Hitachi's Pointfinity infrastructure, and they're looking at using blockchain to transfer that technology onto. Fujitsu, which is one of the largest IT companies in Japan, has actually been focusing on digitizing the workspace as a theme, and they've launched some enterprise solutions to track and verify digital assets. They've actually launched an innovation center focused on blockchain in Brussels in 2018. mostly looking at smart cities. And talking about cities, actually, we had Tsukuba City, just north of Tokyo here, that last year ran a vote for residents using a system that was powered by blockchain. So lots of different activities. Tech companies haven't been standing still. Rakuten, which is one of the largest tech companies in Japan, large e-commerce company, first and foremost, they actually bought a blockchain development company in Northern Ireland, renamed it their Blockchain Research Institute or Blockchain Lab. And so far, they've been focusing on enterprise solutions. For example, early in the year, they've launched Rakuten Wallet, which is actually a regulated Japanese crypto exchange. And what's very interesting about Rakuten is that they probably ran the largest loyalty point system in Japan, Rakuten Points. All the Japanese are crazy about Rakuten Points. And potentially shifting that system onto blockchain could be a massive enabler for new applications. They also run an e-money system called Rakuten Pay that could also be migrated to blockchain. And because of their size and their penetration with clients, that could really be a game changer. Recently, you might have heard that Line Corp and Yahoo Japan are merging. Those are two of the largest tech companies here. They both own regulated crypto exchanges in Japan. Line owns BitMax and Yahoo Japan owns TaoTao. Line also owns an offshore crypto exchange in Singapore called Bitbox. And they're both active in e-money as well. Line Pay and Yahoo Japan has PayPay. So, and last but not least, Line actually launched a social score called Line Score. And they probably see, again, I'm not privy to their inner management talks, but I can see them as looking at blockchain as a platform technology to bring together all of their activities in the financial space. Now, the blockchain ecosystem in Japan is very active. Of course, there are regulated exchanges. There's 19 active exchanges plus Tech Bureau, which was taken over by Fisco. That was the old ZIFE that is still in the bed book, so to say, by the FSA, so they can't really operate after their hack. But there is a queue of over 100 applications for more licenses that the financial regulator has received. Just to give you an understanding of the market, these are official statistics for September. There have been about, for the month of September, trading volume about $4 billion on the regulated exchanges for spot trading. There's been about almost 10 times as much for margin trading. And in fact, JPY is the most pair JPY Bitcoin after USD. Bitflyer and Liquid are probably the two most well-known exchanges, but there are several more, as I said. But beyond the exchange business, there's a very fertile incubation network here, particularly in Tokyo. You can see here a number of names of incubators that focus on blockchain. And of course, there are a number of other ones that focus on more general technology, but these are dedicated to blockchain. Truckload of meetups happening, I would say, once or twice a week, every week. Some more successful than others, but you're certainly, I haven't seen it in any other location, London, San Francisco, or anyone else, the kind of intensity of the community getting together through meetups. And out of that, a number of conferences taking place regularly. I would say there's a big conference every month in Japan, save perhaps for the summer months. And here are some of the names of the most active or well-attended organizers. Education is not probably as active as it could be, but we've had some student-led research groups develop both at the University of Tokyo and Waseda. In fact, the University of Tokyo actually launched, after receiving a fairly substantial grant, they launched a blockchain course. It's not a degree, but it's part of a course that one can take. And then there are some private companies like Code Chrysalis that have actually created blockchain software development courses for engineers. Now, what are some of the future opportunities and challenges? Well, I don't really know, but my views are we'll see through the new regulation some degree of need for an upgrade by all the exchanges. They need to upgrade their functions. They have to comply with title requirements in terms of KYC and AML. As we saw, as we discussed, there will be less. Well, margin trading will be limited in terms of how much margin they can provide clients with. And as we saw in terms of numbers, margin trading is 10 times as big as spot trading. And therefore, this could be a fairly big area where they would suffer. And also, and we didn't really touch upon it, but the new laws coming into place in April 2020 will also regulate more clearly what kind of marketing you can do to the public, and therefore potentially requiring a more professional marketing support. That will all drive, I think, pressure on profits inevitably. But also, I think what's very interesting is if you are able to help the exchanges with solutions addressing these new requirements, you can have a very interesting business opportunity. Now, fintech applications, I think there'll be plenty. I think, as we said, both traditional financial companies and technology companies are exploring the use of blockchain as an enabler for fintech-focused financial services. And Japan has been a big pressure by the government to enable cashless society. The percentage of cashless use last polled by METI, the Ministry of Economy, Trade and Industry, was lower than 20%. They want to achieve 40% cashless use by 2025. So, blockchain could be an enabler for that. As we saw, particularly for the large banks, trade finance is a really important area where they see and believe they can make tangible savings using blockchain. Now, STOs is something that is yet to be explored, but once we're going to have this regulatory clarity from April 2020, that's an area that could also see some improvements. And that will include services like custody, KYC and AML, and settlements, trading, and so forth. So within these new activities enabled through regulation for STOs, there could be business opportunities for solution providers in each of these segments. Now, IoT, Internet of Things, another big point. You probably know Japan is the leading supplier in the world for industrial robots and the second largest user after China. And we've seen a very strong focus by the automotive sector in Japan, but I think everywhere, on new technology. And Toyota's was an early mover for blockchain, but I think others would follow. And therefore, it's an area where being able to offer efficiency gains and cost-saving gains through the use of blockchain in IoT-driven production lines and so forth could be a very interesting area as well. Now, trade, we already talked about trade finance. However, I think there's additional areas where Japanese companies would be very interested in, particularly data and supply chain management, which is part of their office digitization initiative that's been happening over the last couple of years. Prime example is Entity Data with the trade platform, which is essentially a consortium of 18 different Japanese companies, and they're looking to essentially launch now with the idea that they'll be able to not just look at the financing part, but all the paperwork part to be handled through a single platform. So the theme of digitization and automation is very important for what Japan calls Society 5.0. So, and this is from the government of Japan. They're looking at creating they call it super smart society. So it goes beyond information society, but actually something that society that knows how to use the information for its own benefit. And they're open and very interested in looking at all different sorts of different technologies, and blockchain will be an important one. So I think if you're working on solutions that help digitization and automation, and you have that solution on blockchain, it'll be very welcome by companies here in Japan. And with that, I'd like to open to any Q&A. I don't know, Luca, whether you want to. I see there's a question here on.
Thank you, Maurizio, for your super exhaustive presentation. I really learned a lot. Unfortunately, I have some time constraints for today, so I think we can just get the first question that is in the chat. I would invite all the participants to send to me or to Maurizio any other questions you might have from today, and I'm sure that Maurizio will be more than happy to answer. But for today, we will just limit ourselves to the first question that we see here in the chat window. Thank you for
Okay, so the question is, are the existing banks serious and speedy enough in blockchain, or do they run the risk to be squeezed by digital fintech startups? Which banks in Japan and US you see leading? Well, that's a tough question. No, the Japanese banks aren't speedy. I think they're serious, but they're not speedy, and that's just a fact. And therefore, there are opportunities for, particularly I think the tech companies, to take business volumes and opportunities away from the banks, but it won't be, I think, very quick, because the mega banks do enjoy a fairly protected market, and regulated activities in Japan need to go through a very long and thorough vetting by the regulator. And therefore, a US company that comes here, like Revolut, I think some of you may be, that's actually a UK company, you may be familiar with. It took them 2.5 years to launch their service in Japan, and they're still in beta. So unless you have deep pockets as a company, I would say taking on the banks is going to be a big challenge. I think what we see a lot of the more successful tech companies doing here in Japan is working with the Japanese financial institutions, not just the banks, also the asset managers, the insurance companies, to support their innovation drive. I hope that answers your question.
Thank you, Maurizio. And thank you to Eva, of course, always helping out from Brussels. Thanks to all the participants that today were with us. I already wrote these in the chat window, but let me repeat myself. We will publish, as usual, the video of the webinar in a couple of weeks on our YouTube channel.